is the beginning of the chaos. And we notice that the market is fluctuating right now. Doesn't mean that it's not going to go back up, but we're going to see more of this chaos, this volatility as we move throughout this summer and into the fall. And it's going to get worse and worse as time goes on. And we can see right now that we are headed towards this major correction. That's what a lot of people like to call it. It's really a collapse of this fake economy. Let's just call it what it is, because a lot of the numbers right now are a complete illusion. They've been manipulated to create and paint the picture that this economy is doing well. The San Francisco Fed right now is out there, and they're saying, well, the job market is not as strong as perceived. And this is coming from the San Francisco Fed. Quote, the labor market may not be as tight as the headline unemployment rate suggests. Really? Because we've been looking at the unemployment market. We've been looking at the unemployment numbers. We've been looking at what has been going on, and we know that the numbers are completely manipulated. And they went on to say that between 1948 and 2015, the work rate for U.S. men 20 and older fell from 85.8% to 68.2%. The participation rate of female workers is beginning to decline as well. The trend in the workplace has not been our friend. And we know it's not been our friend. When we look at the actual calculation of unemployment going back in time, forget about the manipulation, we see unemployment right now above 23%. And this is according to Shadowstat's John Williams, who's taken that calculation and he's using the old calculation and how they calculated unemployment. Today what they're doing is, hey, if you haven't been on an interview in 4 weeks, we just don't count you. You're no longer looking for a job. Yeah, you are. People are still looking for jobs. And when we look at what's going on around the country, we see corporations, stores, they're all closing, they're laying off individuals, and jobs, well, they're just not being created right now. Even though the corporate media, the BLS numbers, Trump keeps telling you the jobs are coming back, not right now. Nothing has changed. Things are rapidly deteriorating. But there is good news. The too big to fail banks, well, they just topped $1 trillion. For the first time ever, the market cap of America's big four banks topped $1 trillion, and they've been surging about 30% since Trump was elected. Now, the last time the nation's big four banks topped $1 trillion in market cap, it all didn't end well. And we know what happened back in 2008. And we can see right now, from everything that we've been looking at, from every single piece of economic data, plowing through the stats and looking at what's really going on, we can see that the economy is deteriorating very, very quickly at this point. And what's going to happen is the signal to let you know that the economy is not doing well, the market is all of a sudden going to come down, and it's going to come down hard. And then people are going to say, whoa, hey, we're in a recession. This is a surprise because we thought the economy was doing well. But remember, the Fed already came out and they warned us that the economy isn't doing as well as they thought. They're disappointed, but they're still raising rates into a weak economy. Trump has already said that the economy is a complete mess. The corporate media is already saying that the economy seems to be slowing, not doing as well anymore. Only like 2 months after Obama left office, which is absolutely ridiculous. What's been really happening here is that the economy has been built on this fake recovery. Now this fake recovery is completely disappearing. And it's not just happening on its own. Of course, the central banks are helping along, and they're getting prepared and ready to bring this entire system down because they want to blame this on another party. They don't want themselves to be blamed, and they don't want something coming out of left field where all of a sudden they have no control over it. They need control. And just because they create the currency, just because they control the stock market, they don't really control the individuals who go out and spend money, who use their funds, because they don't have total control. They do have some control, but they're always nervous about something happening. And this is why they want to bring this down themselves. Now, Deutsche Bank is out there, and they're saying that the Fed just gave Trump just enough rope to hang himself. Now, Deutsche Bank, their credit derivatives expert, Alexander Kosick, he writes that there are basically two different possible endings to the current economic situation. Or, as he puts it, the future is bimodal with volatility to be found between politics versus policy. Now, in the March FOMC package, it implies effectively a real rate rise and is most likely bearish for break-evens, which could diminish the effect of the border tax on the trade deficit and as such reduce the impact on growth potential. Now, depending on the interplay of politics and policy, degree of political resolve, and the Fed actions, we could see two distinct paths of resolution of the existing tensions in the mid or long run. On one hand, it appears that the Fed is removing uncertainty around the terminal rate, while on the other, politics is creating a binary outcome which could have a dramatically different effect on long rates. Put simply, the Fed has given Trump just enough rope to hang himself with, and since all that matters now is how effective the president will be passing his political agenda, which is not looking good, should Trump fail, the one of two possible outcomes that is most likely is the one where the curve bear flattens or inverts, prompting the next long collapse. That is what we are headed for. This is what the Fed has done. They're bringing him into a situation where they're going to collapse the economy around him. And the chaos is going to pick up as we move into the spring, as we move into the summer, and things are going to get worse. If you notice, the corporate media hasn't even really mentioned the debt ceiling as of yet. Doesn't mean it's going to be a big issue, but they're not even mentioning it. And we know that there are additional FOMC meetings coming up, and we know that the Fed is planning to raise the interest rates. Now, if we see them raise the interest rate in the spring, well, guess what? That is another signal. If they don't tackle the debt ceiling, that is another indicator. It's all letting us know that they're bringing this system down. And they need to bring it down because the system cannot be sustained. They need to transition into a new system. Now, hopefully, we transition into a system where the central bank is not involved. But at this point, we don't see that happening. We do see the painting of Andrew Jackson behind Trump. We know that Andrew Jackson visited Andrew Jackson's tomb. This is sending us a signal that maybe he's going to follow in the footsteps of Jackson, but we need to wait to see his actions. And so far, a lot of his actions, well, they're not following suit. It looks like the deep state has control of a lot of what he's doing right now. We see there's this huge trade war heading our way between the United States and China. And right now, the United States and China, they're the two largest economies in the world by far. And the upcoming trade war that is about to erupt will be cataclysmic for both sides. The Trump administration and the Chinese government, well, they're both gearing up for the prolonged trade war. And it's going to be very severe implications for the entire global economy. Now, over the past 10 years, the U.S. has run a trade deficit of over $2 trillion with China. And as a result of the inbound trade, we have lost tens of thousands of manufacturing businesses, millions of good-paying jobs, and hundreds of billions of dollars of tax revenue. And this time around, the Chinese are already preparing a very harsh response, even though Trump has not officially made his move yet, but he's been talking about it. And the policy advisors believe that Trump administration is most likely to impose higher tariffs on targeted sectors where China has a big surplus with the United States, such as steel and furniture, or on state-owned firms. China then could respond with actions such as finding alternative suppliers of agricultural products or machinery and manufacturing goods while cutting its exports on consumer staples such as phones, laptops, and anything else they see fit. Now, when this trade war actually begins, economic activity will be reduced significantly, and the U.S. economic growth is projected to be about 1% in the first quarter of 2017. That could be more than enough to push us into a deep recession. Some of the biggest U.S. exports to China include like airplanes, autos, agricultural products, and let's say a batch of Boeing orders that are meant for China. Well, those could be replaced by Airbus. U.S. auto and iPhone sales in China will suffer a setback, and U.S. soybean and maize imports, well, those will be halted. So what happens if all or part of the economic activity goes away? Well, according to one study, the short term, millions of U.S. jobs could potentially be at risk if a major trade war happens. Millions of American jobs that appear unconnected to international trade, disproportionately lower skilled and lower wage jobs, would be at risk, according to a PI study. And of course, a major trade war would hit American consumers very hard. Because think about this. When you go to Walmart, when you go to the dollar store, when you go and pick up all these products, where are they normally made? China. So a trade war would hit all of us in the wallet because the cost of living and all these products, it's going to go up. And considering the fact about 2/3 of the country is living paycheck to paycheck, it's not going to be good for the American person. It's going to be absolutely awful. And we know that the globalists, this was all done on purpose, offshoring and moving all manufacturing jobs to China, setting China up, because the globalists knew that they needed to do something with the treasury bonds. Who was going to buy them? So they made a deal with China. Listen, we'll move all manufacturing over to you as long as you buy the treasury bonds. This whole deal was to keep their system going. But eventually, they knew that the system was going to die. They knew that the dollar, well, it just couldn't be devalued right off the bat because it would be a complete disaster in the United States. And they knew they were just buying time, moving everything off to China, and then having China manufacture all these products really, really cheap, have them come back to the United States and make people believe that everything is fine, while they're purchasing treasury bonds, keeping everything operational. But eventually, we knew that this whole system was going to deteriorate. And here we are today. Because once a Ponzi scheme, always a Ponzi scheme. You can shuffle just so much until it all comes to an end. And here we are today. It's all coming to an end. And when it all comes to an end, it's going to be absolutely terrible. And this is why you hear talks about the United States becoming a third world country, the United States losing the reserve currency status, because this is coming. And we can see right